Hello everyone. Today we are going to review strategy based on the candlestick patterns, and again, one of the more basic strategies that we are covering in these videos. It's a strategy that focuses on trading to extreme trends. So more or less, what are we looking for is to identify when is the right point when the trend shall turn and go in the opposite way. We are not really looking for in this strategy to identify and actually to find a point where the trend is going to completely reverse and looking for 200-300 pips move. Not really. What we are trying to find is we are trying to look for the start, for the point, the actual point where the trend may start reversing or at least make a correction. But given that we follow basic risk management principles in the context of risk reward, then we are not looking to make to trade weekly, daily charts looking for 400-500 pips. So first step in order to implement this strategy would be to identify a trend. So when you look at this chart, I prepared two charts. The first chart is a 4-hour chart dollar yen. If you look at this chart, you see that we are trading sideways, but more or less we are also creating lower highs and lower lows. You can see here high, then a lower high, lower high, lower high. Again, it's not really a very steep downtrend, but still as long as we are creating lower highs here and here lower lows. You see one lower low, second, third, four lower low. Then we are looking then we identify this as a mild downtrend. The second thing that we are looking here, let's say indicator, is we are then starting to look at more focused on specific segments of price action. So for example, you can see here that we had a side effect, we had sideways trading, and then from here, this is an important level, 109.40. You can see that we fell down and we fell 115 pips to the downside very quickly in a, let's say half of a trading day. And then here, this is the candle that we are looking for. So when we are falling here, when we are falling down, now we are looking for a point where the price is going to reverse and we're going to see a correction. Obviously, in this example shows that we had a very big correction. Actually, we almost created a new high here, but at this point we are only looking for this candle, which is a key. It's a hammer candlestick pattern, which means that the open is higher than the close is higher than the open. And not just that, but actually the price, when this candle opened, the price started pushing lower, and then before the candlestick was actually formed, we closed near highs, and we have a hammer candlestick pattern. It's a bullish candlestick pattern, and it usually is a signal that downtrend is finished or is close to be finished, since the bulls are regaining control. So this will be actually the most important part of the strategy. As soon as you have this candle, then you may want to enter a long trend. If you want to have a confirmation, there are two confirmation indicators to look out for. First one, if you have if you can identify the support level, like we have identified this trend line here, then you can see that we went below the trend line, but we couldn't close. We closed above. This is usually very bullish sign, and we saw a push higher. The second validation indicator would be the candle after the hammer candle. If it's a big ring candle like it's here, it means that the bulls are now fully in control, and we may see a leg higher. Here you can also see the same thing. This is even a better example on the same chart. So we had a big fall from 109.40 to 107.40. It's a 200 pips move. You can see consequent red candles, and then you see here a perfect example of hammer. So huge wick down, long wick down. You can see that we opened at 107.70 and then we pushed 40 pips lower, but we actually closed near the high, and then we created a hammer which pushed the price higher. And actually this was a multi-week low. Since after this we pushed a couple of hundreds of pips higher. The second extreme now on the other side is a shooting star. So we have a hammer on when we are trading bullish side, and we have a shooting star we want to trade a bullish side, bearish side, I'm sorry. So shooting star, what is a shooting? This is a shooting star here, this candle here. Ideally this candle here will be a red candle, but as long as we have a long wick to the upside and we closed nearer or closer to the downside, then actually it's a shooting star. Again, we have a validation point. We have a huge horizontal resistance here. You see that we had one touch, second touch, third touch, and then when we try to go above this trend line and clear stops above this horizontal resistance, we actually were rejected, because at one point obviously we traded somewhere here. So let's say 10 pips above this line, and then we were rejected and we were pushed back 25 pips lower, which immediately put additional pressure for the bulls. And of course here also we have a second validation indicator, that's a red candle. And now here, if you're entering your trade, you sell this candle here, the red one. You put your stop above the previous high, and then you can go and look for a first support level. This will be this horizontal support and 100 moving average. So this will be the perfect trading the shooting star. If you want to talk about risk reward, so you are selling 128.85, let's say, and your stop should be 129.20, so you're risking 35 pips, and your stop take profit will be 128.15, which means that you risk 35 pips in order to make at least 60 pips, if not even higher, if you want to really push and look for here 200 MA. So it's extremely productive strategy. It's very good since you can define your stop loss. You are playing against the previous high. So as soon as this candle opens, you put your stop loss above this candle, and then you look down for first initial support where you can take your profit. The same here, you put your stops below the low, and then you can, for example, here in this particular case, you could have bought the price here, and then you can take profit here, either at this trend line that now acts as a resistance. Obviously here we had a big gap, so there was some also fundamental factors included here, but even without it, this will probably finish with a move higher.